My goodness, guys, this is not what I thought was going to happen today for SoFi stock and for the stock market here in our second day of trading of 2024. Things are not looking so good. They're not looking good at all, and we're pretty much extending the losses from yesterday. We have the Russell today down 1.4%, the NASDAQ, the S&P, and the Dow, they're each down 0.6 to 0.7%, and we have SoFi down, are you ready for this, guys? Down over 13% on the day. So we have to break down the charts here on SoFi, the indexes, all that good stuff. So hit that like button. Make sure to subscribe. You might as well follow me on X as well at Stocks Talk Stocks, link down below. And with that being said, guys, cheers. Let's dive right into the video. So again, man, this is not looking good. The beginning of 2024 has been volatile and red, to say the least, right? I mean, look, we have the VIX up over 5%. And like I said, all the indexes are down yet again today, and SoFi is down over 13% after not doing much of anything yesterday. I think it went down a little bit yesterday, but we pretty much consolidated all trading day yesterday, as you guys can see, from around 950 to 975, and today, well, we're down under 850. Now we're at $8.38 when I'm making this video, and the low of the day, I believe, was 825. No, 828. There we go, 828, which, yeah, not looking so good, guys. It looks like here from yesterday's close to where we hit earlier in the day, 828, SoFi was down around 14, almost 15%. That is a big down move here, guys. And overall, now we're in a bear market from just where we were a couple of days ago. Just a couple of days ago, SoFi was at 1050 in the end of last year. Now it's at 840. It is down around, let's see, 20%. So now we're way under the moving averages on the 1 hour chart here. We're about to get a death cross, potentially the 50 SMA crossing under the 180 SMA. And now we're pretty much at a multi-week low, not like a 5, 6, 7 week low, but we're at a 2.5-ish week low. And it looks like we're going down to maybe test the lows from before the Fed meeting, which you guys remember, ever since that Fed meeting, SoFi went ballistic from 780 pretty much all the way to 1050. So now we're going back to 780, 790, $8 by the looks of it, right? That's the next main support that I'm looking at here in the short term, for SoFi stock. So what is going on? Why is SoFi stock dumping down towards the 180 SMA on the 4 hour chart, which, mind you, that's a big support here. You guys can see at about 810, 820. Well, it's because they got downgraded by one particular analyst at one firm here. Let me actually pull it up and show you guys. I have an article here on Market Watch. Let me show you here what's going on. Give me a second. By the way, smash that like button, guys. Make sure to subscribe if you have not done so already. I appreciate you all for the support. As always, we're trying to hit 50,000 subscribers this year, which I believe is totally possible. So SoFi stock could follow record year with a sharp plunge. This new bear warns, and again, this is only one analyst at one firm, so don't get too freaked out. Don't get your panties in a bunch, guys. But yeah, this is what's causing the stock to get destroyed right now. Again, SoFi stock could follow record year with a sharp plunge, according to this analyst. So let me show you guys. And by the way, I've never actually heard of this firm. Maybe I'm just missing a bunch of these firms' names. I don't know, but yeah, I've never heard of Keefe, Bruyette, and Woods. Have you guys? I don't know. Let me know in the comments. But this guy, Mike Perito, at that firm, Keefe, Bruyette, and Woods, he downgraded SoFi to underperform from market perform, warning of a, quote, premium valuation and potential pressure stemming from lower interest rates, and he cut his price target to $6.50 from $7.50, with the new target implying 33% downside relative to Tuesday's close. And even though it's one analyst from one firm, right, this does cause panic, if you will, or maybe not so much panic, but it does cause a sell-off. A lot of the time, things like this they spark sell-offs, especially in companies that are smaller, quote unquote. I mean, SoFi is still a multi-billion-dollar company, but they're not as big as, let's say, some other big tech names or other fintech names in the space, right? But either way, when we get news like this, yeah, it could cause some selling overall in the in stocks in general, right? And Pareto noted that SoFi stock got caught up in the relief rally following the Federal Reserve's mid-December signal of possible rate cuts in 2024, and he questioned whether that enthusiasm is warranted, which I understand where he's coming from, no doubt. We looked at the charts about a minute or two ago, and we saw how SoFi was at 780 before the Fed meeting. And now, now it's at 830, 840, but it got all the way to the mid-10s just about 2 weeks after the Fed meeting. I understand. I totally see where he's coming from. Maybe it got a little bit too far ahead of itself, but for it to drop 30, 40%, like his new price target is implying, I don't necessarily agree with that. I don't know. It could happen, but I don't necessarily agree with that. Personally, you guys can see here, SoFi, quote, is actually at risk for down earnings, at least initially, if rates come down materially due to its fair value accounting, he wrote, and quote, longer term, the bank's cost of capital will reduce and the ability to lower its deposit costs should accelerate in a lower rate environment, but SoFi may also be forced by market forces to lower its coupon rate, which could directly impact earnings negatively. And in his view, quote, it would be difficult for SoFi to sustain personal loan originations near current levels without reducing its coupon rate in a scenario where the Fed cuts rates meaningfully, given the competitive dynamics versus credit card companies, re-entrance of other competitors to the market, plus consumer expectations for lower debt yields. So in other words, guys, this guy here from this company, this firm, again, that I've never heard of, he believes that the lower interest rate environment is going to hurt SoFi, and there's going to be increased competition, which no doubt there's going to be competition, but I don't necessarily agree with them fully. Sure, lower rates might not be the best for the company, but he's acting like these rates are going to drop like a brick. I mean, let's say the Fed, or we get a little more inflation, the Fed, switches their path on cutting rates. This could materially change things for SoFi moving forward. So of course, the rate cuts that are projected are not set in stone, but he's adamant about. He really is adamant in his view that SoFi is going to suffer in 2024, and that's why he cut his price target. Do I agree with that? Not necessarily, but I do see where he's coming from, and that's something worth noting. Whenever you're looking at opposing views, you got to understand where they're coming from and take their opinion, maybe not so much with a grain of salt, but hear them out, right? See where they're coming from and understand all different views of a company, the bullish case, the bearish case, especially when you're in that stock. If you're in that stock, like I'm in SoFi, you have to be aware of all the different angles. You don't want to just be surrounded by yes men or people that think, the stock's going to go to $100 a share. Everybody's bullish. You don't want to be in an echo chamber, guys. You want to see opposing opinions, and I respect it. Although I don't agree with it fully. I respect his opposing opinion, and that's why SoFi is down 13.5% right now. Again, it's right by the 180 SMA on the 4-hour chart, and mind you, even though it's down big time right now, it is actually still holding an uptrend, believe it or not. So maybe we get a relief rally here at about 820, 815, 830, this general range. Let's see what happens moving forward. And let's say we do break under the 180 SMA. We start going down towards 750, 650. All right, maybe we slip even more at that point. But for me, guys, that would be a spot where I'm looking to buy more, right? And I'm actually in the stock, full disclosure, under $7 per share. I think at $6.90 is my average cost around 2 accounts, or in 2 accounts roughly. So I'm still up big time, and I'm looking at this as a potential buying opportunity on the weakness, after we had a pretty big month, a massive month of December, where we arguably did get a little bit too far ahead of ourselves, right? So what do you guys think about SoFi? Let me know your thoughts in the comments down below. And I was going to break down the indexes in this video, but it looks like we got a little bit too carried away with SoFi. It's all good, so make sure to subscribe for the next video where we do break down the indexes, other stocks that I'm looking at. And yeah, before you click off, don't forget to get your free stocks from Moomoo, guys. I'm telling you, this is the best promo right now by far. Use that link down below or go to stocksurfest.com/Moomoo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks, each up to $2,000. And if you fund your account with at least $1,000 on top of those 5 stocks, you get 10 more stocks, each of those up to $2,000 as well. So 15 stocks, each up to $2,000, guys. Get on it. Use that Moomoo link down below. Get your stocks. Let me know which ones you get in the comments. And with that being said, guys, cheers. I'll catch you all in the next video.